Hello, this is Diego Sorno from MDO Mortgage Broker. Thank you so much for watching our channel. The difference between mortgage broker and a mortgage lender is that as a broker, we have many channels to be able to source the loan that is designed for you, for your situation, whatever it is, whether it's credit, income, or assets, we have a loan within our different channels. Today, we're going to be talking about self-sufficiency test. But before we do that, make sure that you subscribe to our channel. Click on the bell so that you get, every time we post a video, you're going to be notified. So let's go deeper into self-sufficiency test. Self-sufficiency test, it's a term that is used by FHA loans. And FHA loans comes from the Federal Housing Administration, which is a program that will allow homeowners to purchase a property 3 to 4 units. Now, understanding that it doesn't matter how much money you make, if the self-sufficiency test does not pass, you won't be able to close on that loan. So let's go and find out how you qualify for that. Some people ask me, Diego, when do we do the self-sufficiency test? The self-sufficiency test is usually done by the mortgage broker right before you put in an offer on a property, because an appraiser has to go once you, let's say you have a property under agreement and the appraiser goes to the property. If the appraiser determines that the market value of the rents don't coincide with the existing rents on the property, they may give different values to those rents. And those rents are the ones that are used by the lender to evaluate the self-sufficiency test. Now we're going to go into an example here. Let's assume that you have a 3-family property and you're going to be putting down, you're going to be putting down 3.5%, and $2,000 is the current rent or market rent for that property, and it's 3 units, so it's $6,000. The maximum mortgage you can have on that property with a market rent of $6,000 is $4,500. Now, why not the full $6,000? Well, FHA over the course of the years has something called a vacancy factor. They don't use all rents to qualify, neither for the income to qualify you and to help with the rents to qualify, but also for the self-sufficiency test. So if the rents are $6,000, your max mortgage after taking a 25% deduction currently under the current conditions on FHA, the maximum mortgage will be $4,500. So what is $4,500? Well, that is 5 components of a mortgage: principal and interest, taxes, real estate taxes, homeowners insurance, and the mortgage insurance. Okay, this is what insures the mortgage against default. So now, understanding that the 5 components have a factor in your loan being 3 or a 4 unit passing the self-sufficiency test, it's important that you know, well, how you can control that. You can control that. There is a possibility that you can, let's say rates are at 4% and you need rates to be down at 3%. Well, you can ask the lender how you can get down to 3% so that you qualify under a lower monthly payment, which should enable you to have a lower monthly payment. Step number 2. Let's say you already did that and this payment is still above $4,500, so maybe you'd get a lower insurance quote. Okay. Number 3, there may be opportunities on certain properties, certain areas where you can get a real estate tax discount. These discounts come already in a form of residential exemption for owner occupancy or age. Okay. So if you're buying this property from somebody who already has that residential exemption, maybe you qualify and that property tax is not showcasing or is not displaying the correct tax amount. So find out if that property that you're looking to purchase, 3 or 4, has a real estate tax discount. Now, the third method, or the third option that you have, is FHA allows a homeowner to purchase a 3 to 4 unit. As a matter of fact, a 1 to 4 unit with 3.5% down. But in this example, 3 to 4, 3.5% down. But if you want to go below the 4,500 and you already apply a lower interest rate, you already applied a lower insurance, you already applied your residential tax, the property has or doesn't have it. Now figure out, maybe you can put a little more money down. That way your monthly payment will go lower. Self-sufficiency test is done on every FHA loan, 3 to 4 units. It doesn't matter how much money you make. If you make $1 million, you can still apply for an FHA loan, 3.5% down. You will still not be able to buy it if it doesn't pass the self-sufficiency test. Now let's go into some key points or tips. Location and real estate is the key. So when you're buying an investment property, try to think, hey, Diego, what should I consider in location-wise? Is the property near a train station? Train stations can be detrimental or can be a good factor. If it's near public transportation, if the commuter rail passes right behind the house and the house shakes when the train comes by, so that can be a tough thing, to live and to get tenants in there to live in a property like that. But so that's number one, location. Not only is it because of a train, but consider a gas station, for instance. A lender's appraiser will view a property in a different way if it's very close to a gas station. It can be considered on a commercial district, and now the value may have an impact. Okay, so location is very, very important. Number two, how much money is it going to take me to bring this property to full market rent? And that can be, let's say you got to replace or remodel the kitchen, the bathroom, the floors, the roof, foundation, replace all heating systems and electrical. For that, we can talk about a renovation loan. If you look through our channel, we have a renovation video where you learn everything and anything there is currently where you can purchase a property and renovate with a FHA or conventional renovation loan. But considering the condition of the property to get the full rental market value, it's important. How much will it cost me to do X, Y, Z? As important as that is, it's also important to understand that once you finish or once you improve this property, now how much is it going to cost me to maintain this property? Because there is maintenance costs associated with having a rental property. Tenants tend to, be down on a property more so that if you own it, so if you live in it. So consider maybe replacing your fridge or a stove every so often as a matter of numbers. So have, an X percentage of replacing or redoing the roof, every 15 years. The cost of a roof over 15 years, and you do your numbers that way. That way, you know exactly how much money you're going to be spending or your maintenance. Usually a roof I would not factor in, but some people do. Water heaters also can be a factor in when you're doing the property maintenance. So tip number 3, important to understand that taxation, we're not an accountant, but taxation has an implication on your federal tax returns. When you do your tax returns, oftentimes the federal government allows you to deduct certain things that you can't when you have a property that is a single family home that you live in it. So again, understanding that, talk to your accountant and figure out which ways you can write off some of the stuff that you do, that you put in or that you invest in your property, because it can be a difference between getting a large return, tax refund or not. Vacancies. So it's important, if FHA on this example is giving you 25% vacancy right off the top of the rent, so count that as a matter of just doing your numbers right. Make sure that you have a vacancy factored into your computation so that If you are having a 3 to 4 unit and it's going to take you X amount of time to get your property ready for rent, you have 10% or 6%. Again, depending on the market where you're buying, depending on the market where you're investing, you may have a lot or a little. Again, we have a lot more tips. This is why I work with a mortgage broker. Please feel free to reach out to us. Diego Sorno from MDO Mortgage. Make sure you subscribe to our channel. Click on the bell. Make sure you share the love and share this channel with your friends and family. Thank you.